Hey guys, what's up? From Vanguard entering the crypto market, the $11 trillion asset management giant, to the Federal Reserve pumping $13 billion in overnight repo purchases, to BlackRock doubling down on tokenization. The last 24 hours have been absolutely crazy for crypto. So, in today's episode, I'm going to break down the big stories that I think each and every one of you should know today because these are the ones which are going to help you figure out how you need to play the crypto market. But that's not all, because the biggest story of them all is the big, massive announcement that Trump wants to go all in on robotics. So that gives us a great opening into the crypto robotics sector. And today I have curated five coins that I think are going to do extremely well if that narrative indeed heats up. So that's what this episode is going to be about. If you're new here, I'm Rohit. I've been running this channel for the last 3 months, and I thank you all for joining me in this journey. I've been working in the crypto sector for the last 4 years now. I've worked in exec level positions in companies like Polygon Labs, Socket Protocol, and Long Hash Ventures, where held senior roles managing, where I've held senior roles deploying as a capital allocator, deploying millions of dollars in early stage crypto startups. So I have a lot of sense of where this market is going, and I've had the good fortune of having a front row seat in all the innovation that has happened in the crypto market. So with that, let's dive in, guys. The first thing, right? The Federal Reserve just pumped a multi-billion-dollar stimulus into the US banking ecosystem. So, through overnight repo purchasing, this is their second largest liquidity injection since COVID, and it surpasses not just COVID, but it also surpasses the peak of the dot com bubble. So, overnight, guys, in a span of 24 hours, from Japan announcing that they are going to um, uh, you know, that they are going to increase interest rates from the yen carried rate, now no longer in existence, to the Federal Reserve announcing quantitative easing, and now the Federal Reserve just put the initial speed, just the first step. The Federal Reserve just took the first step in pumping the US banking market. So, as soon as this liquidity finds its way through the banking system in the hands of investors, you're going to start to see liquidity build up in risk on assets. The AI trade still exists, the crypto trade is strong as ever. But this is not all, guys, because I was also looking at this information, this data point on US M2 money supply, and it's important that you take this data into perspective, because while $13 billion is a lot of money, if you compare it to the US M2 money supply, which stands at $22 trillion, $13 billion is a blip in the ocean. So while this might lead to a short term bump in Bitcoin's price or in some crypto assets, this will not lead to a recovery from the bear market that we are in right now. So don't get too excited, but it is certainly a trailer of a movie that will unfold in front of our eyes in the next 2 to 3 quarters, where you will start to see the Federal Reserve doing many things, and in simple words, printing more money, bringing more liquidity into the system, and thus driving the prices of assets. Now, I found this interesting post from the Kubisi letter where he said that the Mag 7 stocks have rallied 300% since the launch of ChatGPT on November 30, 2022. Guys, exactly 3 years ago, ChatGPT launched, and since then, the Mag 7 have rallied 300%. That's absolutely crazy. and compare that to S&P, which during the same period has generated only 70% returns. So the Mag 7 have generated 4 times more returns than the S&P during the same period from the date ChatGPT was launched, right? Now, another interesting data point here is that Max 7 have even outperformed silver and gold. And, our eyes for the last couple of months have been logged into the commodities trade because gold is trading at an all time high, silver is putting a new all time high. And in this commodity super cycle of sorts, where investors are trying to figure out, okay, the yen trade is over, there are there is massive debasement happening in terms of more dollars, more euro, more pounds, more currency coming into circulation, and not enough productive capacity built up. They are now chasing assets where they can hold their wealth. And so we saw this crazy run in gold. But even gold and silver, which have had this phenomenal runs, have underperformed the Max 7. And that's because what very few people get is that the current state of AI is not even 0.01% of the potential state of AI. What most people are failing to recognize is the fact that once you have embodied AI in various ways, shapes, and forms, and once you have that inflection point where artificial general intelligence turns into artificial super intelligence, those two moments will change human societies forever. They will change our economies forever. They will change the substrata of our labor market forever. And as Elon Musk said in his recent interview, that work will be optional, quote unquote optional. So that is what has driven this rally. And this rally is not going to stop anytime soon. And I'm going to talk about that as well. But the thing to note, and the first story that I want to talk about today, is Bitcoin. During the same period from November 30, 2022, which is exactly 3 years when ChatGPT was launched, Bitcoin has rallied 426%. So the only asset which has outperformed the AI, quote unquote, AI trade or the Mag 7 rally is Bitcoin. So it's very important that you zoom out and look at Bitcoin in the right perspective. Now, another big news came out in crypto earlier today. Vanguard, one of the largest asset managers in the world, managing $11 trillion in asset. In fact, Vanguard was one of the first index fund creators of the index fund product, which basically revolutionized retail investing forever and created a passive investing tool for retail investors to get indirect exposure to the equity markets. And this giant is now allowing 50 million clients, it's 50 million clients, to trade crypto ETFs after years of resisting or allowing them to buy crypto assets. And here's the reason for why they're doing it, right? And this comes straight from Vanguard's head of brokerage and investments, and he says that crypto ETFs and mutual funds have been tested through periods of market volatility, performing as designed while maintaining liquidity. And this is a big statement, guys, because for the longest time, somebody was calling Bitcoin a rat poison. Somebody was saying that crypto markets are structurally broken. Somebody was saying that it's just the wild west of finance. But here it is. You have one of the world's largest asset managers saying that crypto ETFs have been tested through periods of market volatility and are performing as designed while maintaining liquidity. And this is a huge statement. This is a huge vote of thumbs up coming from a huge institution. And if you understand what's going to happen, billions and billions of new capital is going to chase bids on BTC and other assets. I'm going to talk about what those other crypto assets are, and this is going to push up Bitcoin phenomenally high. Now, Bitcoin is not the only asset because Vanguard's guidance is to invest in crypto ETFs, and they have identified 5 digital asset ETFs to allocate or allow their clients, their 50 million clients, to invest or allocate part of their capital into. So one is obviously Bitcoin via IBIT, but then there's also Ethereum, there's Solana, there's XRP, and then there's EdgeBar or Hedera. So it's important, that you keep this into account, because once those 50 million people start allocating capital, these are the assets which are going to attract liquidity. Whether or not they have strong fundamentals is questionable, because XRP and Hedera hardly have any real world usage. Yet they are driven by this retail euphoria and this institutional adoption, driven by partnerships, driven by narrative. And narrative is what drives whether all institutions, including large global institutions, the only way they operate is through FOMO. And the reason they are getting into crypto today is because they have this fear of missing out a huge rally, and they are starting to feel that digital assets are going to play a more and more important central role in the future of America. Next, liquidity is also back, because after this Vanguard announcement, the market buying and selling ratio has just hit 1.17. What this means is, for every dollar of sell pressure on Bitcoin, there is a dollar and 17 cents of buy pressure. And so the announcement of Vanguard has caused traders to run and try and basically front run this institutional momentum, this institutional wave, which is going to hit the crypto market and basically, explode Bitcoin. So they are running back, and liquidity is coming back into Bitcoin, which is a very positive signal in this market. Now, the Vanguard effect, guys, as soon as this information was announced, as soon as this news came out, Bitcoin actually jumped 6%, right? Because right around US Open, on the first day after Bitcoin ETF ban lifted, $1 billion in IBIT volume happened in the first 30 minutes of trading. So a lot of Vanguard investors, they started allocating a part of their capital, a part of their portfolio into the Bitcoin IBIT ETF, and that has driven 6% increase in Bitcoin's price, which is phenomenal. This was a very interesting post by Fred Krueger, where he compares BlackRock to Vanguard, and he says that everyone says that BlackRock is the biggest, and it is. And he's talking about he's referring to BlackRock's assets under management, which is almost equal to or close to Vanguard. I think one is $11 trillion, another is $13 trillion, something like that. But he goes on to say that Vanguard is actually a much bigger deal in most places that matter to most Americans. It's the number one. It's the number one provider of U.S. retirement savings. It's the number one in index mutual funds. It's the number one in direct to consumer investing, meaning regular people investing directly through the Vanguard app. And it's the number one in passive long term money, right? The idea of Vanguard allowing and embracing Bitcoin is huge. So we already had BlackRock before. We already have other institutions offering Bitcoin-related products in some way, shape, or form. But Vanguard has always been this pivotal consumer application layer, this consumer liquidity layer that has that has a massive penetration as well as brand endorsement. But with Vanguard now allowing Bitcoin to be part of their client portfolios is a huge deal, guys. You should not underestimate this. This was another very interesting post by Adam Livingston, and he says that BlackRock capitulates to Bitcoin, Vanguard capitulates to Bitcoin, Bank of America recommending 4% crypto allocation. We have a Security and Exchange Commission which is pro Bitcoin. We have a pro Bitcoin Federal Reserve Chairman on the way. We have a pro Bitcoin Commerce Secretary. we have a pro Bitcoin Treasury Secretary, a pro Bitcoin President in the White House, new Bitcoin derivative products every new week. JP Morgan has started to accept Bitcoin as collateral from institutions. They've also launched their own Bitcoin bond products. So it's obvious. Don't take your eye off the ball. And he's so true. I think he summarized all of the major events that has happened or gripped the crypto market in the last week. It's very important that you understand this. And I think in one of the posts, I read somewhere that while retailers are capitulating, institutional investors are actually buying and taking large positions at this space. So it's so don't lose perspective of this reality, guys. In other news, crypto is now getting more and more institutional approval. In fact, The Economist recently, actually earlier today, published a story where they interviewed Larry Fink, who is the CEO of BlackRock, and Rob Goldstein, where Larry and Rob's talk about how tokenization could transform finance. And quoting Larry Fink, he says that tokenization today is roughly where the internet was in 1996. So if you guys rewind in your head and go back to the year 1996 and remember, hardly we had desktop machines in our homes. Very few, none of us had mobile phones, and internet was just coming up, right? We were operating with dial-up internet, and cut to 2025, we're using top grade web applications in computers which are the size which are now so small that we literally hold them on our hands. So this is a huge leap that we have taken in terms of technology's expansion, and this is what Larry Fink is saying is going to happen in the next decade with crypto, because he is comparing the current state of crypto with the 1996 state of the internet, which was very, very primitive. Now, you need to take his statement in the context of what is happening with RWAs or real world asset tokenization. And I was looking at some data. And this chart is courtesy of rwa.xyz. This is a platform where you can real time keep a tab of all of the real world assets, whether it is money market instruments, whether it is stocks, whether it is bonds, or any other alternative investment vehicles which are being tokenized and launched on chain. And guys, I was flummoxed because in just 24 months, from January 2024 till December 2025, in less than 24 months, the total value of RWA assets tokenized on chain are up 18x from 1.9 billion to 18 billion. So, guys, that's a huge increment in terms of the total RWA assets tokenized on chain. There was another news where extending the argument of tokenization of real world assets, BOFA, Bank of America's wealth management arm, which is one of the largest in the country, managing over $2 trillion of assets, have now released a directive informing their financial advisors to motivate their clients to start modest allocations of 1 to 4% of their total portfolio into the digital asset space. And this is no small feat, because we're going to see again billions and billions of new dollars flowing into Bitcoin. So you have RWAs, you have Larry Fink, you have Vanguard, you have Bank of America, everyone, you have JP Morgan, each one of them wants a piece of this pie. Now, now, now that we have so much good news, I want to give you one real ripple. And so earlier today, Trump administration has announced, and this is from a report coming from Politico, where Politico has reported that after its AI push, the Trump administration is now turning attention to robotics. Commerce Secretary Howard Lutnick has been meeting with robotics CEOs and is all in on accelerating the sector's development, according to sources. And this is a big deal, guys. This is going to be pretty huge. So I started looking into, I started investigating the robotics sector. The first thing that came to my attention was this chart from Kaito. Kaito, for those of you who are unaware of what Kaito is, this is an InfoFi platform which basically tracks mind share of various crypto narratives being discussed on Twitter. And in since September 2025, the mindshare for the robotics sector or projects operating at the you know at the where projects operating at the intersection of crypto and robotics are being discussed on Twitter, and those discussions, those projects, the mindshare for those projects collectively is up 4x since September of 2025. Um, and finally, extending onto the robotic space, I came across this announcement between Circle, which is one of the largest stablecoin issuers in the world, and OpenMind. And Circle and OpenMind have now entered into a strategic collaboration where OpenMind, alongside Circle, will develop foundational standards for machine to machine payments. And so, together, they plan to bring USDC powered micro payment protocols to life and shape the infrastructure for autonomous real world AI transactions. What you need to understand about this announcement is that OpenMind is basically building the orchestration layer for robotics. What this means is robotics, once it scales, once it becomes something big, it will need its own payment layer, and it can't use the existing TradFi payments layer because it's slow, it's costly, and it's not built for microtransactions. But crypto, on the other hand, is custom built for microtransactions. So if a machine is buying energy, it's buying compute, or it's selling its own inference, or its services as an autonomous drone fleet, it can basically use this machine to machine payment standard to operate in the real world. And if you can understand how that will unlock massive, mass scale, robotics powered, machine powered payments, then, man, the opportunity is just too humongous, guys. And next, I started looking into doing some research into how the sector has developed. And Blockmates, I mean, guys, kudos to them. I think they put on a great research report, which was also published in September of earlier this year, about 3 months back. And this is a very interesting tweet where they say that when we first looked into the robotic coins, the sector was under $100 million in market cap. But by the time this report dropped, and this is September 2015, the collective market cap of robotics coins had surged to $250 million. And today, it is already $450 million. So you can see how much of an increase robotics coins have. But to give you a little perspective, guys, this number today is roughly $982 million. But in comparison to the overall total market cap of all digital assets, all crypto assets, it's less than zero. It represents less than 0.1% of all value ever generated by digital assets. So we are very early. And speaking of exponential bets, asymmetric bets, robotics is right up there with AI. It's right up there, with uh, with privacy, those narratives which have the potential to become extremely big. So, what is it? What is this just like many other narratives in crypto? It's just all fluff, or is there any meat to this idea of robotics meeting crypto? So, Blockworks further goes on to explain that there are five areas where robotics actually need crypto, and with crypto, they can achieve these things that are virtually impossible to happen in through traditional technologies. So, those five areas are orchestration. To simply define orchestration, it is the ability for machines to engage with each other. Decentralized ownership, this is when you and I, as investors, can participate and own a slice of this machine economy, which is very hard for us to do in the private space because the private space is owned by venture capitalists. It's the investments in those companies are gatekept, and it's very difficult for retailers like us to get any upside from any of these emerging technologies. Um Data security and verifiability, of course. Blockchain, one of the foundational qualities of a blockchain is verifiability and immutability of data. And any AI system at some point in time in the future will fundamentally require verifiable inference, verifiable training, and that's going to be another key area where crypto will serve robotics. Now, the financial layer, we spoke about the Circle and Open Mind partnership. This is going to be a universal machine-to-machine payment standard, again powered by crypto rails, and finally funding and community alignment. And as production efficiency improves, costs decrease, and materials and technology advance, many thought leaders think we've already stepped into the robotics era. This, in turn, is expected to drive the market to $70 billion by 2029. Now, if the crypto robotics space is able to capture even 5%, a small puny 5% of this number by 2029, that's $3.6 billion. And currently, these assets are sitting at $500 million. So we're looking at a 6x from where we are. And that's me being conservative. I think more realistically, crypto robotics sector will capture $5 to $7 billion, or maybe $10 to $15 billion of this upside, of this potential market size, and that would give us more than 15 to 20x returns, guys. That's asymmetric outcome in a very short span of time. Now, looking into some of the projects that are out there, I came across five coins that I found interesting. I'll talk about each one of them very quickly, but just to show you some price performance in the last 24 hours, especially since the Trump robotic announcement came out. Sapiens is up 107% in the last 24 hours. Kodak is up 47%. Oki is up 16%. EMDR is up 30%. And NRN is low single digit, still positive, green. So you can already see that some of these projects, which have already been favorites of crypto traders, or folks who are deeply entrenched in the in the AI space within crypto, what are the projects that are their favorites? I'll talk about each one of them very quickly, and we're going to go through their charts as well. So let me just take you through some of them. So I'm going to go to Gecko Terminal, where I have indeed made a list of these projects for you. So let me quickly log in and take you through each of these projects as well. All right. Exciting times, guys. Exciting times. I mean, think about it. Bitcoin getting so much mainstream attention. President Trump announcing this robotics initiative, robotics coins pumping. I mean, like, some days you just don't get enough. So, guys, I was looking at the robotic tokens. So the first one, guys, is Sapiens. Sapiens is currently valued at a market cap of 42 million. and its FDB is 171. When I first picked up this coin, this was while earlier today when I was researching it, it was trading at an FDB of 162. So while I was researching and I was preparing for this video, it's already up by 9 million. If you look at the chart, its all-time high at the top of this wick is close to 140 million. So we're still sitting at 43. If it does have a solid run, and if things are looking the way they are, we're looking at a minimum of 100% ROI. And if it goes to the psychological level of a stop, we're looking at a 226% upside. So I would highly recommend that you keep Sapiens in your toolkit. In simple words, what is it that Sapiens, what is their business? What is their product? So in simple words, guys, Sapiens is a decentralized data foundry. What this basically means is it collects information, it collects data, and it turns that data into enterprise grade AI training data. It cleans that data. It provides data specialization. One part of it is precision label data for autonomous systems and robots and sensors, chain of thought reasoning, human level judgment, and nuanced decision making for complex tasks, and peer powered quality, right? It's all decentralized. So everything is being contributed by hundreds and thousands of individual contributors. So this is actually very, very cool. It's one of those projects which also, I mean, I was doing a quick review, has some kind of a Binance backing as well. So that is also another plus for them. As you can see, it's a very professional looking setup. They have a huge team, people with years and years of experience. And the whole process looks like very, very cool. Like information that they are gathering will be foundational. Look at like LiDAR, video, radar, and sensor. These are foundational informational data sets required to train physical embodied AI. Without this, you can't create high quality robots that are capable of working like us, looking like us, and operating like humans in the real world. So Sapiens, I think, is a very strong bet, and you can already see, guys, from the price action. I mean, in a very short span, it's gone from like 28 to 42 million dollars. So that's a 50% price action in less than 24 hours. So this is how strong this project is. Maybe it is short lived, who knows. But from a long term perspective, if you want to allocate like 10 to 12% of 10 to 15%, and if there's just one product, one coin that you would want to hold in the robotics space, um, for that asymmetric upside, then Sapiens definitely deserve a place, at least in your watch list, if not in your portfolio. I'd highly recommend that you research this. Now, the second token that I want to look at is Oki. You know how we have our ears through which we perceive sounds, and we have our eyes through which we perceive light and have a visual sense of the world. That's what Oki does too, guys. Oki is also, by the way, up 13%. But basically, Oki makes the physical world accessible to AI. And what they're doing is they're building the spatial web. What this means is they're running these machines, and they're collecting all of this data, which will allow at some point in time to help robots, browse the physical world, navigate it, search it, perceive it, make meaning out of it, and operate in the real world. So this is also a very cool project, guys, and currently trading at 40 million with an FDB of 120 million. It has, in its previous run, it's gone from where it is right now all the way to 120 million. So we're looking at a sweet 3x in a very short span of time when once liquidity indeed returns. Right now, we're nowhere close to it. because when you will actually see a breakout at these levels, you should see volume bars which are like these. So right now the pump that you see is mostly a market maker driven pump. People haven't yet paid attention to these tokens, so I would highly recommend though that you add Oki to your watch list, and see how the chart unravels and make an informed decision. Now, the third project that I want to talk about is Codec Flow or Codec. And as I was researching about codec, and let me see if I have my research here for you guys. Yes. So what Codec basically does, guys, is it essentially offers on-demand compute for AI agents, and it is also creating a marketplace for these autonomous CUAs. What a CUA essentially is a computer use agent, meaning there is an AI agent which is fully autonomous. It can see your screen, it can control your cursor, it can click on buttons, it can open a browser, and it can do tasks. That's what a computer use agent is. So Codec Flow allows operators powered by the Codec stack who can then work across all machine types. So it's not just like a desktop machine or a cloud computer, an edge device, even a robot, right? So that's where Kodak comes into this whole robotics picture. Currently trading at a 10 million market cap with an all-time high of 35 million. So we're looking at a sweet 3x. Again, you're seeing a nice volume bar here. So this is actually a good, breakout at this place. You can already see a lot of people trying to buy, about 3,800 odd holders. Highly recommend that you look at Kodak in your, if you're looking to get some exposure into space. Now, the fourth one, and this is also a very interesting project, it's called Modular. And what Modular is basically does is, you're going to already see the chart. It's kind of, pretty much broken and down the dirt. But this too has seen a bit of a bump given the news. And it's up 27% in the last 24 hours. And what Modular really does is it's building the Airbnb for robotics. In simple words, not everybody can afford a robot, and many people might also have excess capacity of robots. So basically, I can use Modular to rent a robot, or rent a fleet of robots, or a fleet of drones, a fleet of autonomous cleaning bots, a fleet of autonomous machines in some factory that I need for some work that I need to get done. So this is what Modular does. I think it's an interesting project as well. It's currently trading at a market cap of 3.3 million with an FDP of 4.1 million. Again, a very interesting project and something to keep an eye on. And finally, guys, the last one that I want to talk about, the last one is NRN or NRN agents. To give you a very simplistic definition of what NRN does, this is a platform or it's an early experimentation. What they're trying to do is they're trying to create a lot of games, and these games will be used to create standardized evaluation benchmarks that robots would be, or robotic brains would be uh, ev- judged on. Like for instance, today, every time these different AI labs, let's say Grok or Chat or OpenAI or Meta, when they announce a new model upgrade, let's say from GPT-4 to GPT-5, they also immediately announce certain test results. Like, this model outperformed or was able to clear the mathematics engineering test or the physics test. Similar tests, however, do not exist to evaluate and see the performance of robots. I mean, I see these videos on YouTube where robots are doing backflips, But that's really not what they are meant to do. They are meant to replace you and I as labor in the real world, in our economy, and do work on our behalf. And that would require them to pass certain evaluation tests, both cognitively and physically, to prove that they can operate in the real world like you and I do. And that's where NRN agents come into the picture. It's currently trading at about 8.4 million with an FDV of 18 million. So it's quite cheap right now. But I should also tell you that these are highly risky bets because we don't know if this company would actually be able to build this kind of an evaluation test, or would that evaluation test get mainstream adoption. So these are open questions in my head. I'm still dealing with them, but I thought I'd still bring NRN to your you know to your attention. But that's how this market is. You have to operate with like 60-70% judgment. I do want to end by saying that I'm just a guy sitting in my room making YouTube videos. So none of this is financial advice. If you did enjoy this video, though, don't forget to give me a like. Don't forget to subscribe to this channel, and don't forget to share this video with your friends and family. That's it from me today, guys. I'll see you again on Friday with another rocking episode. Sayonara.